You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. That rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-scintillating Options Insider Radio Network. 13 programs on the old network, including 400-plus archived hours of goodness known as the Option Block. Where can you find all that goodness? Well, of course, the mothership, theoptionsinsider.com. Don't forget the S and the. Those are two crucial parts of the old URL. And, of course, while you're there, click on the Insider Radio Network tab, and there you go. All the shows come up. You can stream them, download them, read through the show notes at your leisure. And, of course, you can also find them iTunes, TuneIn, Stitcher, pretty much anywhere you find your favorite podcast programs, including our own mobile app available for iOS, Android, and the Fire OS. No shortage of ways for you guys to stay on top of your favorite programs, get the latest download, stream them, and then, of course, when you're done listening, maybe while you're listening, send in your questions, your comments, your feedback. I hate that Andrew guy. I love that Tosaw guy. Whatever you want to send in, let us know. We love to hear from you guys. All right, and joining me on the program, the two aforementioned characters. Starting off with the man beaming in from the always scenic, always sunny, oh wait, perhaps not, St. Charles, Illinois. You know him, you love him, as Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome to the program. And what happened to the weather shield out there in St. Charles today? I hear it's on the fritz.
Well, it's still sunshine. It's just we call it liquid sunshine here.
I see. You have your own variation of sunshine out there. You guys are so advanced in St. Charles.
We're very technologically advanced. I mean, it's just, I don't see why anyone would ever want to leave this place.
True paradise. I know some people do leave it, though, because when I was down in the happiest place on earth a few weeks ago, I did run into two ladies from St. Charles. So there you go.
They were posers. If anyone's really from St. Charles, they would never leave it.
They told me, they said, thank God we got out. We climbed the walls, dodged the razor wire and the bullets, and we finally made it out, and we had to celebrate by coming to the happiest place on earth.
Oh, yeah, the infidels. I know them.
Yes. I'm sure you're well aware of them. The heretics who have escaped the compound known as St. Charles. Flipping the script to the other big compound, that great state compound known as Maine, we welcome on the Rock Lobster himself, Mr. Andrew Giovinazzi from our Options Oddities program, as well as a lot of other appearances on the old network. And, of course, he moonlights at this place over there called The Pit. Mr. Rock Lobster, welcome back to the program, sir.
It is a pleasure to be back. You guys have had Sebastian last week, didn't you?
I believe we did, yes. We had a double dose, I believe, with Sebastian.
Wow, how was that?
Terrifying as always.
Well, that's good. That's what keeps the listeners excited. You never know what's going to happen.
Yes, it keeps the mute button at the ready. The editor's always on their toes whenever we have a double dose of Sebastian, the double dose of the meatball on the network.
That's funny. He dropped something awesome on Bloomberg about, the Fed, unless they all live in Colorado, are not going to raise rates. And it flew right over the head of the interviewer at the time. It was on Bloomberg on Thursday. It was quite funny. It's funny to see the joke fly over the top. of the interviewer. But
that's the quality humor that we come to expect from the Greasy Meatball himself. And you guys have come to expect an option show from us. So without further ado, let's get started. It's time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, that music means it's time once again for the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's catching our eye in today's activity. We are recording this today, Monday, June. I'm a month behind. I'm still on vacation, July 6th there in the old Options Insider Studios. It was a bit of an interesting day, yet another kind of somewhat schizophrenic day on the old street with the markets vacillating a little bit, hitting some lower levels and deciding, yeah, things aren't as bad as we thought, and bouncing off those a bit, and then selling off a bit again towards the end of the day to kind of settle in around not that far from where we started after all the noise had settled out. S&P's off nearly half a percentage point on the day, a little over 8 handles to 2068. We have a little bit to chat about some technical levels in the S&P, so you handful of technical analysts out there will be excited about that. I'll leave that to our resident technician, Uncle Mike, but of course the S&P selling off about 8 handles today to 2068. The Dow, the bit of a laggard to the downside, only closing down about a third of a percentage point, or about 50 handles exactly on the day, to 17,680. The NASDAQ also off about a third of a percentage point, and the VIX cash still hovering up there in the high teens, right around the 17.5 level right now, gaining back about 3/4 of a point or so on the day. And since we were talking technicals earlier in the day, I shall now turn our attention to our resident chartist, our resident technician, as opposed to the diehard fundamentalist we have on the other side of the country. Uncle Mike Tosaw, a few things caught your eye today, including that ever so popular 200-day moving average. Why don't you tell our listeners what it was about today's activity that really resonated with you, what caught your eye out there today?
A couple things. I actually wasn't even aware that we were this close to it, honestly. Just to clarify, if we do have any new viewers, because I'm sure we get many new listeners, because I'm sure we get many new ones every day, calling me the technical analyst on the show, it's about the equivalent of someone saying, I rode a horse once as a kid. Great, you're the head veterinarian. So with that, I thought it was kind of interesting today that, and as I was just working out in the morning before I came to the desk, that I know, and they were pointing this out on one of the TV sets at my gym. We actually were right by the 200-day moving average, and so I thought that was kind of interesting. So I actually brought it up on my screen today, and the low of the day at about maybe 3 minutes into the open on SPY was 205.53. And I think, Mark, on your screen it had at 205.55. It just kind of depends on how your moving average chartist or whatever the formula is for how they calculate moving averages to the exact point as to where it was. I think Mark's was at 205.55. Mine was right there. But I thought it was interesting in that we bounced right off the moving average right at the open. Now, last night before the mark on Sunday night trading, we were actually, I believe, 35 points down in the S&P. We were actually negative on the year. So I was expecting it to be a very busy first hour of the day for me today in terms of getting out of long calls and making adjustments and that type of thing. But when I woke up in the morning, before I went to the gym, just looking on my phone, we were only down about 12 points in the S&P on the futures. So with that, I think it was almost like an instant replay of last week to a point. But the difference is that today we rallied, and the other interesting thing is we're actually up another 4 points after the market is closing right as we speak. We're about maybe 12 minutes after the close right now, so we're getting the rally that we've had the last half hour of the day or last hour of the day is continuing into the after hours for now. So it's just like printing money, always be a bull, right, everybody?
So you're saying all of our conversation about technical analysis, it was all a lie, it was all a smokescreen, it all really works. Everyone out there should be diving in and running their charts nonstop all day. Is that what you're saying to our listeners?
Now that I've already done it, yes. Just kidding. That's my compliance officers listening.
That was always the thing we were always primarily using technical analysis for, was to try to find those turning points intraday, because that's where, if you're working gamma scalps, that's where you can make the most bang for your buck. And so, day like today, a lot of money perhaps vacillating around that 200-day moving average, providing a little bit of support in the old book, and it seemed to have worked today. It provided a bounce, that much needed bounce. It's what I've said before. The more widely available, widely tracked, widely analyzed, widely held indicators are the ones that seem to, if any of them have any traction, it's those. And it's probably more through sheer inertia, sheer volume of resting orders in the book than anything else. Not any other sort of predictive value. It's just people follow those, so they put orders at those levels. Hence, there is some sort of retroactive impact on the underlying itself. So that's interesting in and of itself, perhaps a bit of a self-fulfilling prophecy. Mr. Rock Lobster, I'm guessing you weren't glued to your 200-day moving average screens throughout the session today. So what caught your eye in today's session, sir?
Yeah, I wasn't glued to it, although like all the guys in our chat rooms, were like, 200-day moving average, up, bounced, up. So there is, if enough people watch something, you can make it true, I guess. I was mostly interested in. I thought the most interesting thing today was like how volatility we kind of opened in I'm not going to say a panic, but vol was bid and everybody's a little worried. Greece is defaulting, and then defaulting, they want to. Plus, this is my favorite thing. They want everything from the EU, but they don't want to give anything back. That's what the vote was. It's like, if you ask this country, you don't have to pay any of your debts back, and you get all kinds of stuff for free. Who doesn't want to vote for that?
It's called playing into domestic audiences, sir.
Okay, sure, I'll take that. I'll get lots of free stuff, and any debt that I might have is going to be haircut in my half. But I'm going to keep getting all the free stuff.
The bankers in Brussels have no vote in Athens.
They have none. So the Greeks were quite happy with the possibility of getting something for nothing, and they tried to take it. So anyway, that's what we've got. But vol went basically to unchanged on the day, and as the rest of the day came in, volatility started to ratchet up again. VIX trading, I believe, over 18 for a while. And now settling back down, as settled down almost below 17. So there was, all I could say is there was a really, the intraday change in vol is a lot, but the market really, we had a 1+% move today. But it feels like the volatility is moving more than the market's moving. And that's because of the fear of the great unknown. But the fact that we pulled back at the end of the day, the futures are slipping into contango a little bit. Most of the volatility products I watch are kind of, I'm not going to say they're back to where they were the day before, but they're kind of just hovering under those numbers. So that's always that is always, I guess, a good sign if you want to, sell volatility, the fact that they kind of sell it off into the end of the day. So generally, that's usually a little more bullish than not for the next day. And still, we are very, very close to all-time highs still, even with the thought of I'm going to say a developed country leaving the Eurozone. So the market clearly is either getting numb to it, or they just don't care anymore, because ultimately they don't think it's going to be a big deal, at least not right now. That's kind of that's what we've got anyway.
Well, talking about Greece and volatility, there's been a lot of action out in that neck of the woods, obviously in the Eurozone. We've been touching on it a bit on volatility views, and of course incorporating V stocks more into the conversation there. You might as well bring it over here as well. Of course, it's been a hot time in V stocks land. It jumped 21%. Again, percents of percents. I know how infuriating that could be, but c'est la vie. Kind of have to just roll with it at this point. It hit its highest level since 2012 last week. Also, as the Euro stocks took their biggest hit in about 3.5 years. At the end of June, on the 29th, there fell about 2.2%. We also, so like I said, the V stocks just jumping. Also, a lot of contracts, as you might imagine, changing hands, averaging 1.6 million contracts a day out there in the Euro Stocks 50 contracts, the highest level since 2011. So surprise, surprise, something big happens in the Eurozone, and Euro-dominated products like the Euro stock, Euro-centric products, I should say, like the Euro stocks, really lighten it up. Speaking of also volatility products, it's good to be in the dedicated proprietary vol/index business, as witnessed by the numbers coming out of the CBOE. Of course, we talked on the last episode about overall options volume being down about 4%. Actually, up about 4% in June, but down 6% year to date. Well, CBOE saw that rally and raised them. Their numbers are out now. Their ADV was up about 6% from May, down 5% from a year ago, though. So you look at that number in hindsight, not as good as it is last month. Of course, May, kind of a bit of a quiet period. We were lamenting all month long. When are we going to see some volume, some action? So have it a few rock and rolling days there in June, and surprise, surprise, it lights it up. The volume increased 16% overall, total volume from May of this year. So that's a big jump. And again, indeed, their ADV up about 14%. And overall, the ABV was about 4.5 million contracts. That's combined options and futures. So not a bad month so far for CBOE, again, showing that it's good to be in the proprietary products game. And we'd be remiss today. We are recording this Monday, like I said, July 6th. And it's kind of a big day here in the Chicago trading world. We talked a while back earlier this year about the beginning of the end of open outcry here for the CME futures traders. Well, that final bell tolled today. And today, yes, the final day for a handful of some forex guys and some soybean guys still out there in their jackets on the old trading floor on the CME, ending 167 years of open outcry, at least on the futures side. Options still going up, still a need for some of that high-touch execution for complex multi-leg option strategies over there on the CME. So they're keeping the options open, but the futures pits going silent as of our recording right now today. So not exactly surprise news, but still perhaps a bit of nostalgia creeping in. I only did a short time over there on the CME. We obviously ran an index operation, so if you're running SPX, you had to arb back and forth with the options over there, the S&P options over there on the CME, so you have to spend some time going back and forth. So I spent some time kind of working with our clerks, getting them up to speed over there, and just kind of getting acclimated to the CME pit, a bit of a different structure than the SPX. But I was never actually on a badge out there, so I never actually traded out there. I mostly just slung some futures hedges. That was about it for the S&P options. Mr. Rocklaps, you ever spend any time over there on the floor of the CME?
Just to visit. Never, never traded anything over there. I was on the board. I almost went over to the board to trade for a while, but at the last minute I didn't. So I watched it plenty of times, but after trading on the CBOE floor and PCX, after you've been on trading floor for 15 years, going to visit them is not hugely as exciting as it could be.
No,
it was a big active place, for a long time. It was cool, no question about it.
Yeah, if you went down there in the height of the kind of go-go 90s when the euro dollar was rocking, the S&P was rocking, and everything was kind of lighting it up, it was a thing to behold. And even at the time, you kind of had a sense that even though you were part of it, I was a part of an open outcry pit on a different exchange. And so you knew you were part of something special, something unique, something that was going the way of the dodo, and something probably pretty soon. I think if you asked a lot of people back in the 90s how long the open outcry would last, I don't think many of them would have guessed, particularly for the futures guys. The kind of Delta One crowd would have lasted till 2015. Most people would have said a lot sooner than that. So they got a few extra years than I think a lot of people expected. But still, a somewhat sad day. Since we're talking futures, Also, a sad day if you're a oil bull, taking it on the chin out there in oil land. We talked a little bit on it last week about how oil starting to trend a little bit to the downside again. Weakness coming out of China, of course, driving a lot of demand for the commodities. Chinese weakness translating into a slump in demand. Of course, the Greek thing also spilling back into crude, weakening demand there, as well as, of course, the strengthening dollar, making crude more expensive for a lot of international clientele. So that's kind of a 1-2-3 combo that's really leaning on crude right now, having to give back some of those gains. Hit the lowest point. It's about a 3-month low, at least out here in crude. The ICE crude dropped about 2% to hit 58.90. NYMEX crude down about almost 5% to 54.32. So both of them hovering back in the 50 range, both of them south of that oh so important, talking about technical levels, also psychological levels, that oh so important 60 level on both of those. Uncle Mike, I know you've been trading a lot of XLE and been very active out there in crude land. Anything out there in the big crude really catching your eye? And have you done any adjusting to your XLE positions as a result of this bit of a give back out here in crude?
No, I'm still sitting on them for now. I think if anything, I would look to buy more of them. The old debate that always rages on about oil, does the dollar drive oil or does oil drive the dollar? I think this is a time to where the dollar is driving oil to a point just because of what's happening in Greece. The other thing that I think we need to make note of is the fact that it is somewhat of a pullback. We have been rallying since the 42 level, and it's sat at 60 for a while. So I think I wouldn't want to necessarily buy right now at this exact level, but I think this could be an opportunity to get in at some point in the near future, just because of the fact that it's oil. I don't really see oil continuing to come down. I think the way with which to do it, as I've said on this show oftentimes, is to buy oil stocks and just sit on them because you really don't see oil companies going bankrupt too frequently.
Yeah, that downside to zero, a little bit less of a risk. Of course, you have some of that Deepwater Horizon and some of that other exotic risk out there that they could have happen to them, but probably not going to bring them to zero like an Enron, unless they have some dubious accounting for all those oil rigs out there. But yeah, interesting stuff. Certainly some profit taking, as well as some lingering concerns out there about demand for crude. We'll keep an eye on that as we keep on rolling right on into our next segment. Yes, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block, indeed, the portion of the program where we break down what's wild, what's woolly, what's wondrous out there in the world of options. Going to kick things off with an interesting one. We talked earlier this year about Office Depot. Of course, they announced their big merger back in February, their proposed merger / acquisition with Staples, the two leading office retailers, getting together. And, of course, they're still in the approval phase. I believe it was Office Depot shareholders who voted recently to approve the deal. Still are some regulatory hurdles, and so people are still weighing in on the fact that the deal is going to happen. The stock closing today, of course, ODP, $8.89. Is an average of about 2,000 contracts a day, doing 83,000 today. So size money still rolling out there in Office Depot to the tune of a 40,000 lot roll on the 8 handle, rolling from July to Jan 2016, 40,500 times. Selling the July 8s 85 cents, buying the July 2016 8s on splits for $1.71 and $1.72, also 40,500 times. So that's some size. So a friend of ours out here, perhaps, obviously still feeling this deal is going through. There's been some movement on the valuation. I think when the deal went through was proposed originally in April, it was going to be around $11 a share. So that would still put some premium on those Jan 8 calls for going in at $1.71 and $1.72. If it goes out at $11, still not a bad trade. The stocks come off a little bit. The things have adjusted a little bit. So it looks like I think it's down to about the 10 handle and some change now, but still not a bad trade. So our friend here obviously saying, hey, I think this deal is still going through and putting some money where his mouth is. I didn't see where he opened on the July, but he probably paid a pretty penny for those if he bought them back in February as well. So he might already be in the hole for some cash. Mr. Rock Lobster, you watching this Office Depot at all? Pretty sizable roll out here. Someone obviously thinking this deal still a done deal.
Yeah, I'm just looking at this because this was just this one wasn't exactly on my radar. It looks like somebody's closed the July 8th for parity. I just don't know enough about the deal overall. There's Office Depot, is it a straight stock swap?
There's some cash and stock, one of those deals, so the price fluctuates based on the value of staples where it's trading kind of thing.
Yeah, I'm looking at there's still some premium left in the July. I mean, I'm assuming that they've already discounted the premium to whatever the deal is. So, but yes, somebody looks like they want to stay long. That is, and it looks like they're buying some expensive options.
Yeah. But even so, if it goes through at about close to $11, they could still work out all right for them. But yeah, they're spending a lot. They're risking a fair amount that this deal is still going to go through. Because if it doesn't go to pass, those $1.78 calls are going to hurt.
Yeah, I was about to say $11. That's That's $2 of risk. That sounds like an awful lot still for a deal that is supposed to be. If it's supposed to be kind of a done deal, that's a heck of a lot of premium, deal premium left.
Yeah, that's putting up some cash. Interesting.
Well, you can see they're pricing the straddle around $2.70 on the 8 side. So they're trying to price it like the straddle's price, like the deal would be done, right? You'd make a dime if you bought it. So they're foregoing the put and just going for the call.
Who needs those puts? Those pesky puts.
Yeah. Well, the problem is even if the deal falls apart, right? What's Office Depot worth? The puts aren't going to help them for anything. Yeah, because it's a $7.50. So the market makers, not being totally dumb, price these straddle right at the nasty point. It looks like.
Technical term, the nasty point. I like it. Maybe we have a title for today's show: pricing our straddle at the nasty point.
At the nasty point.
All right. Speaking of things that are nasty, let's move on to some other names. This one perhaps not so much nasty as intriguing. Right up Mr. Rock Lobster's alley. We're going to shift gears from office retail to hotel chains because he loves to travel so much from scenic and sunny Maine into the land of Hilton Worldwide Holdings, ticker symbol HLT, closing today, $27.80, almost literally unched on the day. This is the name that does, about 5,500 contracts a day, doing nearly 18,000 today. So a lot of love out here for Hilton. And the lion's share of that 15,000, about 10,000, coming on the July 30 calls. Paper just lighting them up to the tune of about 9,800, a little over 10,000 total on the day. 9,800 when we started looking at them earlier this morning, going up for a whopping nickel in one block on the CBOE. Someone had to facilitate this one because there was no bid at the time. There is a nickel bid now, so if someone wants to pick up some more of these, they probably can. It's 15,000 open here, so maybe our friend here wanting to get out of the rest of his 5,000, maybe taking off 10,000 today. Either way, not looking like perhaps the most scintillating of trades, but still size upside going up here in July. In Hilton, Mr. Rock Lobster, also some action here on the 27s, 28s, and 29s. So a lot of call love out here in Hilton today. Mr. Rock Lobster, walk us through what caught your eye in this explosion of calls here in Hilton.
Explosion? My question is why? Why do you dump those calls for a nickel? I can see the reason for who's ever short them to be happy as heck to buy them back with 2 weeks to go.
Yeah, you get a chance to buy them back. That's not a bad thing.
No. And I thought Hilton, there was some spec talk, takeover spec on it. So, but clearly whoever owned them are taking their cookie jar and cookies and going home. And that's the easiest thing I could say on that. So, they're just like, okay, I'm done. I don't think it's going to get taken over, and I'm going to take my nickel and walk. I mean, it is 10,000 nickels, so it's not nothing. was that, $50,000?
That's a nice 50,000. He can go on vacation. He can take his wife somewhere nice.
Pays $10,000 in commissions or whatever he's going to pay. And so, yeah, I mean, I don't know why you closed that with a nickel with 2 weeks to go, because you could probably lean on whoever you bought them from, that they would close those at some point. But it's all I know is somebody took a dinger on 10,000. Now, if the open interest goes up to 25,000 tomorrow, I would be surprised. That would be like, ooh, somebody thinks something's going to happen.
Then we'd owe this man an apology.
We would owe this man.
So we apologize in advance for mocking you if that is indeed the case.
Yes, because you're trying something very, very, let's just say interesting. As usual, they go for the cheapest call, just out of the money, the shortest term, to attract as much attention as possible to themselves.
That's what it is. It's all about the attention as we move on to our next name here, out here in Chevron land. So getting back into the petroleum realm. This one, ticker symbol CBX, closing today $94.77, off about $1.10 on the day. This is the name that does about 31,000 contracts a day, so fairly robust, certainly from an odd block perspective, about 1,000 times the average volume of a lot of our names, if not more, 30,000 in some cases, and doing today about 65,000 contracts. So a lot of love out here for CBX. In particular, what we saw was some puts outnumbering calls, about 1.5 to 1. Seems like the lion's share, certainly of the activity we were profiling, came on the put side. In particular, start things off with the July 96 half puts going up 5,200 times over the July par, or 100 puts for $2.70. So they did it a total, actually, of 11,000 times and some change on the day. Looks like we got a bit of a good old roll down here, with the July pars having about 16,000 and change open on the strike, only 5,000 on the July 96 half. So you can kind of see, while they may be inclined to roll down here, again, the stock trading south of the 95 handle right now, so perhaps moving to a wee bit more relevant, a wee bit closer to the fire strike here on the 96 halves, and away from the pars. Went up in 2 blocks over there on the ARCA for like we said, for the prices listed earlier, and some interesting stuff as we see good old Chevron hitting some new 1-year lows out here as well. Interesting timing out here for our friend Mr. Rock Lobster. What's your take here on our friend rolling down here in CBX?
I think they're taking their money, they're taking it off the table, and they're buying more puts and keeping it going and thinking Chevron's going lower. That's how I see that bad boy.
It doesn't seem to have a lot of love here for Chevron in this trade.
No.
They're sitting on some cash, and they're not just taking it off the table, they're putting it back to work, saying there is more downside. So as we were just saying earlier in the show, some continued weight on crude. Our friend here putting some money where his mouth is, saying that weight may indeed continue, and of course will ripple back up the chain to Chevron and weigh on their results going forward, and putting some size in where his mouth is. So we'll keep an eye on that one. Let us know what you think out there of that trade in Chevron. Do you agree or disagree? As we move on into our final name, it's the bonus round here on the old odd block. Usually we do 3. We'll throw in 4 for you today. We're feeling generous. Moving on to our final name here, Blackstone Group, ticker symbol BX, closing today right around 40 half or so on the day. This is the name that does about 22,000 contracts a day, doing about that much today, a little over 20,000 today. So it wasn't overall volume that caught our eye so much as one trade in particular. Got to scroll all the way out to the Jan 2017 cycle to find this print. And if you do, you'll see it right away. When we started, it was about 8,674 to be precise of the Jan 2017s, going up through the offer, paper buying for $2.60 as the day went on, about another 1,400 or so, going up to the tune of about 10,171 total of the latter kind, for it looks like some little bit lower prices because, of course, the stock's selling off. These calls going out 226 at 244. So taking a bit of a hit on those on the 260 print. Again, very aggressive when they're facilitating this much size and putting it up through the offer. They kind of want to get this thing done. There's no real open interest on this strike, only 2,000 contracts. So there's not someone rushing to close out a short or anything along those lines. It really is someone rushing to get long and getting long term and paying up a pretty penny to do so. I'm guessing that 260 print. Leaving a mark on his P&L today. Mr. Rock Lausch, you take us home. What's your take on our friend really scrambling in here on the long-term Blackstone and perhaps regretting his decision?
Yeah, I mean, he's got a year and a half to go.
Yeah, he certainly got time, but in the initial blush, I think this might fall in our ugly category tomorrow on the good, the bad, and the ugly.
Yeah. He already took a quarter mark already. Now, obviously, that's the trader mentality. It's a quarter 10,000 times. It's still $250,000. So, not fun. And I did not see stock go up against this. So, maybe a long-term bullish, just long-term bullish trade, but just, sometimes it's just like a non sequitur that just sticks out so strangely. The market's falling apart, so I'm going to just do something long-term and wait around. And they're also looking for Blackstone to make some pretty shiny new highs in order to make some money on these. So I'm not going to say it can't happen, but, with interest rates kind of ratcheting up a little bit maybe, and, you'd think that the easy dollars for private equity, this would be a group that would start to decline a little bit over the next year and a half. But, hey, they could be right, but they're paying up a lot right now.
Yeah, you're right. It very much is the old pit trading mentality in me. You just know that P&L at the end of the day is going to be painful as you adjust your skew to fit that, and you just shudder. Even though this guy obviously has a much longer term outlook, he's got a year and a half he's sitting on. He probably isn't that concerned about this, but still, you just know that's leaving a mark, and he may be getting a little tap on the shoulder saying, "Hey, did you have to pay up so quick and so much for those?" So we'll keep an eye on those as we keep on rolling right on into our next segment. It's Monday. That means it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the Strategy Block. This is the portion of the show where Uncle Mike dons his smoking jacket, grabs those stone tablets and bubble pipe, and sits down by a roaring air conditioner to dispense some options, wit, and or wisdom. Uncle Mike, what do you have in store for us today? Sir, the floor is yours.
A little bit of wit, a little bit of wisdom, kind of mixing it in, trying to get just the right mix for our wonderful listeners today. Want to just highlight a trade as to what I'm doing this morning, what I did this morning, why I did it, when I did it, and all that fun stuff. Over the weekend, as I mentioned on the show on Thursday, when we recorded on Thursday, I did not have any. I'd probably a lesser amount of deltas going into the weekend on SPY, meaning that in my call for the call strategy with which I do, I was just simply long the September 209 call. And reason being, I didn't want to be totally out of the market, but it was probably maybe 50 to 60% of the deltas that I usually like to have on the table. And the reason is because of this referendum that we had over the weekend, combined with the fact that it was a 3-day weekend. And usually if something bad's going to happen, a lot of times it seems to happen on the weekends. It's just me. But combine that with the fact that we had potential for something bad to happen, so to speak, with this referendum, didn't really want to be uberly long over the weekend. So going into Sunday night, once I got the news of the referendum, on the yes vote that happened on it, it was something to where we took a hit a little bit in the S&P futures on Sunday night. However, Monday morning, just as I was mentioning, a lot of it came back. So as we opened the morning, I know I had mentioned in the beginning of the show how we had just touched the 200-day moving average. Folks, it's not really part of my decision-making process when I do things. Just thought it was interesting. And after all, I rode a horse once as a kid, thus I'm the veterinarian. So I look at technical analysis with maybe 5% of my decision-making process. So I guess I'm the resident technician. But what number did really catch my eye today was the fact that we held the 205.54 level on SPY. The low of the day, or around there. I'm not an exact type of person. If we're like a penny above or a penny below, it's not a huge deal to me. But the low of the day today was 205.53. The 2014 close in SPY was 205.54. From there, we did start to rally. And my rule is that if we close below the close of the previous year, that's the time when I'm going to really be very conservative, as I talked about on the show earlier in the year, when we were negative on the year. So I was watching the markets closely, and as we were starting to rally, because of the fact that my 209 call was getting further and further out of the money, I was less and less delta exposure. And for the section of the portfolio that I'm actually trading for the clients that are in this, it's a bullish portfolio, and if you get less and less deltas, you got to figure out something to do in a hurry. So with that being said, I ended up selling this week's 203.199 put spread. I got a 50-cent credit for it, and this was in the morning. And once again, it goes back to this trade that I've been doing. It's been working very well this year. Whenever we have a dip, you have an increase in implied volatility, so you can sell a put further out of the money because of the fact that volatility is higher and you have better areas to sell it. And so on that, if the market is resilient and comes back, great. Everything is awesome, as they would say in the Lego movie. However, what I'm more concerned with is when everything is not awesome. The best way to avoid a double chicken wing in wrestling is just not to get into it in the first place. And the best way to not lose on put spreads when the market's going down is to not get into them in the first place. So in this bearish rally, I was just looking through my trading notes here. I have not sold a put spread since June 15th. I was in on June 15th and I was out on June 16th. Got a relatively small profit. We've been coming down, and so if the market's coming down, it's kind of one of those things to where unless we get a good point to get in, I don't want to get in. And so over the course of the last 2.5, 3 weeks, whatever it's been, I've been doing my double chicken wing technique in terms of the best way to avoid losing on selling puts is not to be in the market in the first place. And the reason with which I was doing them is because of the rate at which we were coming down in the marketplace and the fact that every time that we did have a dip, it's usually on something having to do with grease. Now, I could have gotten away with selling one early last week. I chose not to, and the reason is the fact that we still had a lot of uncertainty, and we still do have a lot of uncertainty with grease, but my thought is I feel comfortable being bullish now because of the fact that the referendum's done. Yes, we have the meeting coming tomorrow with Merkel, so there's always going to be something that can happen, but I believe that right now, after the drop with which we have had over the course of the last few weeks, it is safe to sell puts again. Now, once again, if everything's not awesome, what do? Market continues to go down. You have to be ready to roll it down. And if the market does continue to go lower, a lot of times implied volatility will go higher. So that can afford you with other potential opportunities to roll the trade out or just get out at not quite as bad of a loss because of the fact that you have time decay on your side. So with that being said, that is what is going on in the Tosaw strategy block world. And if anyone has any questions, feel free to give me a call.
Thank you for that, Uncle Mike. And now it's time for us to keep on rolling. We have a little bit of time left in the show, so maybe we'll try to squeeze in one or two listener questions really quickly. So without further ado, let's dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is indeed the portion of the program where you guys get your questions and comments sent in to us. A lot of ways you can do that, including, of course, hitting the website, theoptionsinsider.com, via email, questions at theoptionsinsider.com, social media, twitter.com/options, facebook.com/theoptionsinsider, or just grab our mobile app. A lot of it's baked in there as well. First question comes in from Fred. He writes in quite a bit, asks a lot of questions. He asked about paper trading. He says, been having problems finding an options paper trading account that doesn't require me to fund an account. Any suggestions? This question kind of surprised me because I knew from working with a lot of the brokerage firms we have in the past that a lot of them seem to have gone away from that. I thought, at least, that they were making it easier and more accessible for you to go and get a paper trading account. But that said, I haven't gone and checked on all of them on a regular basis. They're tweaking those requirements all the time. Maybe he is indeed correct that a lot of them are requiring you to fund an account, which is, I think, I'm not sure if I entirely agree with that. I'll have to go through each one and check myself. I haven't had a chance to do that yet, but there is a interesting little backdoor you could maybe use if you are indeed encountering that for some reason, or you just don't want to go through the process of signing up with the individual firms. The CBOE does have a link on their page to some virtual trading tools. They call it, surprise, surprise, virtual trading tools, under which they list 3 different platforms, one from OX, the virtual trade, one from Thinkorswim, the paper trade or the paper money, and the other one is paper money, I think, from the Monster guy. So they have 3 different platforms that you can access via their site, and all you really need there is just a CBOE account, which is free. So you can go sign up your My CBOE account, and that will give you access to all 3 of those virtual platforms. So if you are encountering that issue for some reason, maybe this is a good backdoor way for you guys to get some access to these things with only having one sign-in. Maybe you don't want to deal with making a TD account or whatever the case may be. You just want to kind of go kick the tires on some of these platforms. Try that out over there on the virtual trading tools on the CBOE, and maybe that will suit your needs. Mr. Rock Lobster, any suggestions here for our friend, Mr. Fred?
Yes. I thought, and also they tried LiveVol as well for a platform. They generally give you a trial period, so they should give that a try as well. That would be the one that I would add to that list. But Options Express, Thinkorswim, they all have some sort of trial account.
Yeah, it's my experience that they don't require you to fund it. Maybe he's confusing setting up an account with funding. Maybe that could be possible as well. But either way, yeah, no shortage of ways for you guys to access that. And we encourage you all to do that. It's a great first step when trading, rather than risking real money, because that can be expensive. As we've seen today in the odd block, people who have a lot of money sometimes throw it away needlessly. So don't be like those people. Use your wisdom and save some time, save some money, and try a paper trading account, and maybe just get the CBOE account, and you could then have access to all that stuff with relatively little hassle. All right, that's all the time we have for mail today, as we keep on rolling right on into our next segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Well, we hit on a lot of different issues to keep an eye on for the rest of this week. We talked about oil selling off, talked about the Greece thing, continuing to weigh on markets and inject some vol back into at least Eurozone, and of course trickling back some vol here in the States as well. And of course, what else? We've always wringing our hands. What else is there to watch on the horizon? Well, it all kicks off again. The cycle kicks off again this week. We got Alcoa coming on Wednesday, where Alcoa comes, earnings season follows. So we're back off into the race yet again. Just when we finish up, it starts all over again. Alcoa on Wednesday, and we got some other names, Walgreens and PepsiCo on Thursday. The big names, the big consumer-friendly ones you guys are all looking forward to coming in the weeks to come. So who knows? Earnings season, recent seasons haven't really moved the needle a heck of a lot. Perhaps there'll be a few surprises out here that we can look ahead to perhaps inject some vol, some excitement, some energy back into this options marketplace, because unless you're CBOE out there with some proprietary products that are rocking and rolling, now everyone else in the options business kind of saying, hey, where's the volume, where's the love? So maybe earnings season can bring that love to the space. Aside from the impending encroachment of earnings, what else is on your radar? We'll start with you, Uncle Mike Tosaw. What are you watching for the rest of this week?
Well, I just like everybody watching the news about Greece. I think that that's the main thing that's going to be moving the market at this point. Earnings could take precedent, but we'll see. I think that I believe that the expectation is overall in the S&P 500 for earnings to be down about 3% in general this coming quarter. But I think a lot of that's already factored into the marketplace. So with that being said, I believe that Greece is the thing to watch right now, or at least that's what I'm watching for the most part. And also watching to see if maybe we do get an earnings surprise. And if we do, maybe the market could go higher. That would be fun, wouldn't it?
It'd be great for the Perma Bowl in you, sir. I think that would certainly suit your positions to a T. All right, and Mr. Rock Lobster, what do you keep an eye on for the rest of this week, sir?
Same thing. Greece got earnings in a couple of days without COA. And the Fed speaks their speak on Wednesday. So 2 o'clock Wednesday, what's going on with rates? So that should keep volatility from doing too much on the downside. And depending on what Greece does, we could, who knows, if they settle their differences and meet at something and somehow this guy has extracted some concessions from the EU from borrowing money from them. And we'll see how it goes. But that's what we got going on there.
All right, good stuff, Mr. Rock Lobster. And, of course, that's all the time we have for the Around the Block segments, also all the time we have for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts, my partners in crime, to see what they have cooking up that may interest you. Starting once again in the scenic environs known as St. Charles, Illinois. Uncle Mike, what do you have in store for our listeners? What should they look forward to? What can they expect from the old RCM in the weeks and months to come?
They can expect great service, friendly smiles, and songs in our heart every time they speak with us, of course. But if they are expecting anything besides that, we do have ways with which you can trade through the RCM branches, meaning that if you want to trade through one of the brokers with whom we partner, whether it's TD Ameritrade / Thinkorswim or Interactive Brokers, we do get preferred commission rates through them because of the fact that we have over $100 million in assets under management at RCM. And with that preferred commission rate, we don't make a dime off it. We do charge a small fee, but that's how we make our money. But we provide advice and guidance on trading should you need and want it. It's something with which to be, feel free to give me a call and ask me about, and I can tell you more about how it works. We work with everyone from very small accounts to multi-million-dollar hedge funds. And if you are looking for someone to be your financial advisor in one way, shape, or form who is not afraid of trading an option here and there, feel free to give us a call as well. My contact information is 312-212-3531, or feel free to send me an email at mtusaw@rcmfs.com.
And last but not least, Mr. Rock Lobster, take us home. What's cooking in the land? Oh, the pit.
The pit has a calendar and time spread class on the 7th of July. So for all of you interested, and it's free, and that will, of course, lead to our more in-depth class on the July 18th on a Saturday morning for about 3 hours to give you the ins and outs and the nitty-gritties of time spreads and calendar trading and how actually you can make money using them. And as usual with most of our classes, people are like, wow, I learned something that actually saved me some money because I didn't do something dopey that I would have done normally without it. So, yeah, of course, we cannot guarantee that, but we do try to use the fundamentals to teach people how options trade. And now that Option Pit has been in business 5+ years, it tends to resonate with people. So.
There you go. Save some money on your trading and then go ahead and open up a paper trading account. And you can blow all that money you just saved, according to some of our listeners anyway. All right, just joking. All jokes aside, of course, check out the boys over there at the pit to learn more. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.